All right, fellas. This is the second video today that I talked about. This is going to be, I'm going to go over the AB again. Just some different ways for you all to trade it. Some ways there will be advanced. Some ways will be just basic, simple stuff. And guys, the simple stuff, I'll say it all the time. It's not. You don't have to do any really advanced stuff to be any better. Sometimes simple is better. So if you have to do the simple way that I'm going to show you, by all means, do it. I mean, at the end of the day, as long as you're making a profit, that's really all that matters. So I'll dive right into it. So basically, I'm going to start out here. I'm going to go down. I'm going to go over about 2 or 3 or 4 pairs. This is the Euro USD. So a basic way to trade this, I'm going to start that out that way. If you don't really know candlestick formations, if you don't know counter trend lines, if you don't know all that stuff, guys, really seriously, one way you could trade this system here is to you need to know the ABs on how to find the correct ones. If you don't, get with me, and we'll go over that one-on-one, whatever I need to do to show you how to get the proper AB boundary. But one way, a basic way to trade this is to literally place an entry, find your AB, place your entry at the 618 or the 786, and just let it run. That is a basic way to do it, but it's also it really is a good way to. I mean, you can make a good profit off of it because of the fact that you're going to win. All you need, especially if you do the 786, for example, you only need to win 3 out of 10 trades to be profitable if you place your entry at the 786. So, for example, if we sell right here, and you place your stop loss, 10, 15 pips above the A, because you always want to be above the A on a sell and below the A on a buy. So if we place our, let's just say, okay, 1369 to 1379. If we place our stop loss, let's say right here, and you place your target. So if you get into 786, that means we're going to the 272 on our entry or on our take profit level. So if we set our take profit all the way down here at the 272, you're still at almost 4 to 1. So you can lose. It doesn't matter how many times you lose. All you need is a couple winners out of that to be profitable. So it takes the guesswork out of it for you. You don't have to worry about reading the candlesticks and stuff and actually analyze this market. Really, literally, the only thing you need to do is know where to find the proper A and B, whether you're going up or down, and where the A and B is. That's the hardest part you need to find if you're having trouble with anything else. And guys, you can be extremely successful just doing this alone. Now, if you do, let's say, the 786, and that's where you place your entry every single time, you're going to miss a lot of trades because a lot of times this is going to come into the 382, the 50, and then it's just going to fall again. So you're going to miss a lot of trades, but you're going to get it. But if you do every single pair, if you watch every single pair, you don't have to really do much, and you're always going to be in a couple trades if you're watching 20, 25 pairs. So it really doesn't get any harder than that. The hardest part is just finding your A and B. Like I said, get with me if you have trouble with that. I'm trying to get in the habit of sending you guys new A, Bs every time one happens, just so you can make sure you can always watch it and make sure you got the correct one. I'm trying to get in the habit of doing that, even if there's no trade, just to show you the new A, just so you can make sure you got the proper AB on there. Another way to do this is if you want to trade just the 786 alone, but you're afraid to miss the 618 trades, for example. If price, let's say price shoots all the way up, hit your 618, goes a little bit past it, and then let's say it just falls way back down, to our profit target. Let's say it does this to you, but your entry's up here. One way you can do this is once price passes the 618 and is headed towards the 786, and you already have your pending sell order right here. One thing you can do is you can go back in and place a pending sell stop order once it gets to a certain level. Let's say you want to do it when it gets halfway between 618 and 786. You can always set a pending stop order, a sell stop, which means if price continues up, let's say if price hits this and it just continues on up, and it hits your stop loss, then that order here at the 618 would never get filled and you would never lose that trade. But if it comes all the way up, let's say to right here like it did, and then it falls like it did, or I'm sorry, like it could, once it comes back down here, it's going to trigger you in that trade. And if it keeps falling, then you're going to get in this trade at the 618 and you're not going to miss anything. So that's another way to trade it. Or you can just say, you know what, I'm only going to trade the 786, nothing else. Or I'm only going to trade the 618, nothing else. I would recommend, if you do this, I would recommend not setting your only taking 382s or 5. I would do at least the 618 or the 786, just because it gives you a better risk reward, and that's really what it's all about in this type of trading. You really want a system like this, that a trading style that gives you that risk reward to where, hey, I can lose, you know, at least half the trades or even more than half and still not worry about whether I'm going to be profitable or not. That's really the whole point of this entire system or trading this way is, hey, I can jump up here. Hey, if I miss a trade, big deal. Or if I lose a trade, big deal. If I'm almost at 4-1, guys, you can lose a lot of trades and be profitable. That, like I said before, it takes a lot of pressure off of you. It takes a lot of basically fear out of entering a trade. I know, especially when you're new, that if you've placed 3 or 4 trades and you've lost all of them, you know, as a new trader, you're kind of scared to jump that gun, to pull that trigger to get your next trade. Well, you know, if you have this type of thing where, you know, like, you know, hey, I'm at 4-1 on every single trade, or 3.5, or even 3-1, I'm not afraid to, you know, I'm not scared. You know, it'll really give you the confidence, which is what you need as a new trader. So any trader needs the confidence. If you don't have the confidence, then you're not going to be successful. So this is a very simple way to trade this. Without having to really have to analyze the market, you know, like I said, without knowing what candlestick formations are, without knowing about, you know, counter trend line, support, resistance, and all that stuff. Just, hey, know where my AB is. I know I'm either, you know, I know right here that I'm looking to sell the market, you know, in this position. So I'm going to set my entry right here, my stop loss up here, boom, I'm done, I'm going. And you don't have to do anything else. You set, and you come back once a day, and you be like, all right, you know, did it fall? Did it hit my profit? Whatever. Or did I miss it? And it's, you know, you don't have to watch the markets that much, especially since you already know when an AB is set. You already know you can place your pending orders well in advance and not have to worry about anything. So the only thing you have to do is if it doesn't reach it, but it hits your D extension down here, then you know you run your new fibs, your new AB, cancel the pending order, place your new one, and you go. So it's a very easy way to take guesswork out of it, and I highly, highly recommend this for you guys that are new. I know some of you in the group have some experience. Rick, you know, you've got 10 years experience. I know a couple of you guys have, you know, not as much experience, but you're catching on real quick, and you want to learn the other way. But this is a very powerful way to trade. It's very simple. It's extremely simple to trade this way, and I love it. I mean, I actually, believe it or not, I actually have it's not my 786 strategy is kind of like this, but it's a little different, and that's a whole other video. But there's one strategy I trade where I just do nothing but the 786. I don't use the AB boundary. It's different, but it's kind of the same similarity though. I mean, when I'm getting in at the 786 retracement, you know, I'm just, you know, I already know my pending order. I mean, it's very simple. But this way is extremely, extremely powerful. So you'll know over here, you'll see some notes that I have. I always go in every pair usually, and I'll put, you know, the monthly, daily, 4 hour, what direction it's going and what the extensions are. That way, when I'm placing trades, I'll know if, you know, my take profit, say for the daily is, you know, let's just use an example, the D extension is like right in this area. I'm not going to have my hourly D extension below that. Because I know there's a big chance that thing's going to bounce to a trade. So these are just for my notes, so I know kind of, plus where I know the direction of the higher time frames. You know, I know the monthly's bearish, daily's bearish, the 4 hours bearish. So that tells me that, hey, I want to look for bearish. You know, if I'm getting in sell positions on the euro dollar, and all three of these are bearish, then my odds and my chances are much, much higher by taking sell positions. Because I'm going with the trend, especially when all three of them line up. Now, sometimes you'll have the monthly as one and the daily as another, then the 4 hour as, lines up with the daily or something. It's okay to have that. You always want to go, if I'm going to trade the 1 hour, I really want to pay more attention to the 4 hour and the daily over the monthly based off of that. But I still want to know where the completions are. So for this example, another way to trade this, so, you can, what I really want to do is I want to start looking for entries around the 618 and the 50. I want to look for candlestick formations around this, like evening stars, engulfing bearish candles and things like that to tell me to sell. But as another way to get in early if I want, because a lot of times, if it's a really strong trend, I can run my counter trend line. So now I can do this, run from here to here. So if price continues up and it breaks that, and gives me a candlestick formation after it breaks it, that's just another indication for me as a more advanced way to trade to get in early and not miss a trade. So when I do get in this, if I get in down here, my risk reward is obviously not going to be as good as getting at the 786 or the 618 if I'm getting in around the 38. I will usually get in, if I risk 1% on normal trades, like if I get in at 1% risk up here at 786, I'm probably only going to risk about 0.5% down here if I'm jumping in, and then another 0.5% and another 0.5%. As long as I get 4 candlestick formations, I really want to see price, continue up the counter trend line and give me a formation around the 618, around this resistance level here. If I can get a morning star, an evening star, or an engulfing bearish candle breaking this at this level, excuse me, I'm going to get in. I'm definitely getting in this trade. But that's just another, like I said, an advanced pattern way or advanced way to trade this type of trading system that I have. But seriously, guys, if you just get in, if you just use a 786 or a 618, you don't have to worry about anything else. It's very easy for you. You're going to miss trades, but if you look over here, if you trade every one of these pairs, you can do that, and you're going to have plenty of trades that put you in the market, and you don't have to worry about, it only hit the 618 and it fell, it missed my entry. You don't have to worry about it because you got plenty of them that's going to hit. So let's go to another one here. Let's go to the pound dollar. Same way here, you got the pound dollar. So you had this very large bullish candle. So we're in a downtrend. I don't have the 4 hour in here, but you can see here the monthly's bearish and the daily's bearish. I need to add my 4 hours so I know. But so the good thing is the 1 hour we're looking to sell. So if you had the 618, for example, or the 786, this is another good example. You can see here, if this continues to fall, you would have missed the entry if you did just the 786. But you can always, once it passes the 618, set your sell stop, and then when it fell back down, it would put you in the entry, and you'd be on your way to your profit target. That doesn't mean it's going to fall all the way down here. It could retrace back up more before it falls, but just don't get greedy in this market. If you have your rules that, hey, I'm only going to trade a 786, my stop loss is up here, guys, stick with it and just do it. Give it time to develop. You're going to have, like I said, plenty of trades. So if you miss trades, just take that as part of your strategy. Hey, I know I'm going to miss a lot of entries, a lot of winning trades, but hey, this is my strategy. I know that I'm going to win plenty of trades if I get in just here. You could take this. You can draw since we got at least 3 bullish candles, you can take your counter trend line up here, draw it. So hey, I'm going to get in if it breaks this counter trend line here, and I'm going to for you advanced guy, do the advanced trading. I personally would like to get in more around in this area up here. I really don't like getting in below the 50, but I will get in below if it's certain, if it gives me certain, if there's support resistance, if there's major confluence in an area, I'll get in. This one here, if it comes down and it breaks this, I don't know if I would get in or not. I guess it just depends on what my risk reward would be. But it'll depend what the candle really tells me, what the market's doing. But just another way to trade. But you can, if you set this market, like I said, continue up, set your entry at 786, stop loss 10 pips above your entry, your take profit here at the 272, and go with it. The good thing about that is, guys, if you do the simple way, you don't have to come back and look at these markets, 3 or 4 times a day. You literally only have to look at this chart. Even on the hourly charts, you only have to look at this one time a day. You really do, and that will help a lot of you guys that when on your job that where you are not able to, pull up the charts at work. Doing it this way is what I highly recommend. So if you cannot look at the charts on a daily basis multiple times a day, I do not recommend trying to trade it as the advanced way about counter trend line breaks and candlestick formation, stuff like that. I recommend the 786 way that I just told you, because you really do. You can get up in the morning, whether you want to do it in the morning, you don't want to do it in the evening. You literally got to look at it. Literally, just skim through these and find out, set your entries, stops and profits, and close out pending orders if the D extension has been filled, and run your new ABs and place your new pending orders. One time a day is all you got to do, and you're going to be highly, highly successful. I promise you're going to be highly successful if you just do this one little bit. Let's go to another one here. The Australian dollar, so we can see here. Now this one here, you can see we're still technically in our AB boundary trade on this current one because the D extension was not filled. However, when we get this close, we get a double top and we're that close within a few pips from our extension, I'm going to basically consider that extension filled, but I'm not going to place a trade just yet. I'm going to basically let this one play out and see if we get a reversal on it. Now, I am seeing one thing right here, another thing that's telling me to sell, and I'm not selling just yet, but even though we're in an up AB, for those of you guys that trade advanced ways, I'm looking at it a little bit different. For one, if you watched my video just a few minutes ago on the 125 SMA, I don't really have a name for the system. I don't know what, but this is the trend following system here. You'll notice that price broke below that to sell the market. It's a trend following system. So this is one thing that's telling me, look, hey, we got a double top, right around the extension, and the market's falling. And another reason why I'm looking to not buy this market is if we run this head and shoulders here, we've got a nice little head and shoulders popping up over here. I mean, it's so you can see right here, this level is lined up right with this level here. I mean, it's a perfect head and shoulders. So if we go up to that shoulder there is where I'm really looking at. So let me blow this up just a little bit. So that's another reason why I'm not really looking to buy this market. Now, if we run our fibs, I always like to get in an advanced way to get in the right shoulder is at the 50 retracement. So if we run the Fibonacci's from there to there, the 50 retracement is not quite at shoulder, however, at the top of the where we'd really like it to go. However, if you did place your pending sell entry here, your stop loss would go above here, and then your take profit would be down at the 618 level. So that's another reason why, even though we're considered in the up AB boundary on this 1 hour chart, I'm really not looking to buy it because we came so close to the D completion and a head and shoulders is forming, which means is telling us to sell. So I will look, basically right here is what I'm going to do is I'm going to let the market come up. If it does, the market could just fall and may not even come up. But if the market does rally up to this, I'm going to start looking for candlestick formation. I'm not just going to jump in at the 50, but I am going to look for candlestick formations like engulfing bearish candles, evening stars and things like that, pin bars and things. To give me a sell entry, and if that happens, then I will sell the market with my stop loss just above here, my take profit down here. Now, I will probably not take my profit right down here to 618. I'm probably going to take my profit more closer to this level down here. So, yeah, probably right around the 70 area. So that's what I'm doing. That's what I'm looking for on the Australian dollar at the moment. So, and also, let me go back. You can also, another way to do this is once price gets in this 50, you can also, there's a lot of ways to do this. You can also run your counter trend lines here. Boom. See if this follows this trend line up to the 50 level, and once it breaks it, then you can always, that's another way you can enter the market. There's several ways to trade this, but I'm definitely not looking to buy the market, even though we're still technically in the up AB boundary. But that's the reason why I'm kind of holding off on that right now. The dollar franc. So so here is we're in our new AB boundary. So you can see here, if you set your stop or your entry at the 786, you definitely would have missed the trade. But like I said, you're going to have a ton of those. You're going to have a lot of them where it does not come all the way down to the 786. Set your entry wherever you want, but what I'm saying is pick a strategy away and stick with it. Don't say, hey, today I'm doing the 786, tomorrow I'm doing the 50, then the next day I'm doing the 618. Pick one and stay with it and let it run. And you're going to see the results at the end are going to be good. The times that results are really bad is usually when you're all over the board and you don't have consistency. That is very key in this is consistency. If you had a good money management along with good risk reward and everything else, you got to stay consistent with it. So, and you can see here the monthly is bearish, daily is bullish. So I'm really looking direction of the daily. The monthly, I'll hop over and see if there's anything going on every now and then. But I just want to know where the overall extension is. And you can see here it's pretty far off. So, so I will leave it. So for example, what I was telling you guys for the simple strategy here, once we have a new AB and price comes back, let's say down this area, you're going to place your pending stop or pending buy order here, buy limit, stop loss down below, and then your profit, take profit up here at 272. And you're going to leave it until the extension is completed. So literally when you come here every day, you're going to skim through all these over here. You're going to be like, okay, got my pending order, but we still haven't completed the extension. Go on. You leave it until this extension is completed. Then you come and run your new AB, cancel your pending order, then you just place your new order. So, for example, on this one, you would have jumped in right right here. Stop loss would have been 10 pips below that. So, 9, 8, right there. Take profit would have been up here. So this one would have been right at just a little over 3 to 1. So most of the time on your 786, if you get in there, you're going to be at least 3 to 1, 90% of the time. Sometimes you'll be at 2.5, 1, but most of the time you're going to be at least 3 to 1 or more. And it allows the market to move, to breathe within the AB boundary. And if you get stopped out, guess what? Then we most likely have a reversal on our hands, and then you just get in again. You run your new ABs from the top to the bottom, and then go. You start looking for sell entries. So, but this is a very powerful way to trade, guys. Keep it simple, and like I said, if you're having trouble with candlestick formations, you don't understand them, counter trend lines, support resistance, guys, then don't do it. Just learn your ABs, where to run those in the direction, and set your entries at the 618 or 786 or however you want to do it, and go with it. You will be profitable. You may not have thousands of pips in profit, but if you every month, but if you trade by percentage, that's the goal. Is you're going to gain a certain percent every month, and that's where we have that $1 million challenge, guys. You can turn $1,000 into $1 million in 4 years by only having a 15% return as long as you compound it. So just keep that in mind. That 3 to 1, 5 winning trades is if you had 5 winning trades in a row, is 15%. If you did 3 to 1, you're going to have a lot more trades than 5. So don't really shoot for, hey, it's a losing month if I didn't do 15%. You're going to have months where you do 5%. I've had several, especially here recently, where I've only done 5, 6%, because I've had several that I've done well over 100%. You know, I've had some where I've averaged, you know, where I did 50%, 30%, whatever. So don't go by that. Just go by, you know, am I winning? You know, am I coming out ahead? You know, that's really where you want to be. If you do that, the numbers will get there. Just concentrate on being profitable. Consistent profit is what you want to concentrate on. So, but yeah, here another way. I already got that drawn counter trend. We got in right here. Being the profit, you know, it's you look at support, resistance, anything like that. So you can see here the daily is bullish, even though the monthly is bearish. So I'm, you know, in the monthly, the hourly is also bullish. I didn't do my 4 hour, but I normally, I don't know why I don't have the 4 hour in there. I usually do, but very profitable way to trade. Let's look at a couple more. Here's an AB here. So that's not a very good example. The AB is a little large. I don't really like them when they're this big either, just so you know. When we have that big of a spread between our A and B and that large, I really don't like it. So I usually will most likely pass on the trade. This one here, here's our AB. Our new C is down here. It's the lowest point. So, you know, set your entry here for those of you who want to keep it simple. 786. It's pretty, it doesn't get any easier than that. What's wrong with my, hold on a second. I don't know how that happened. All right, so right here, if you set your pending order at 786 level, right down here, stop loss, if you do 10, you can even do 15, whatever you want, 1634 to 1624 here, and then your profit up to 272. So 3.76 to 1. So you can see here, you're going to be at least 3 to 1 if you do 786. So yeah, you can add this in for you guys want to do the main. If you want to do the advanced part, you can add in that you know, the 125 SMA that we do for trend following. When it breaks above, you know, you buy, breaks below, closes below, you sell. Same thing here, broke below here. You know, you can run a counter trend. You can utilize this into the system. It doesn't mean you can do anything you want. Here you go. Broke below, broke the counter trend line, then it broke above that, closed above that. You know, you can set you can buy here, set your stop loss below this low, or set your stop loss below the A, and then have your profit target all the way up here. So if you did that, well, this got messed up. If you did that, it's actually right at the level where you would have gotten. Set your stop loss below that, and then you're still 2.5 to 1. Now, if you set your stop loss below the A, it's not going to be as good, but you know, you're going to be basically 1 to 1, which I really don't like anything 1 to 1 unless, you know, I don't like anything 1 to 1 if it's the only trade I'm getting into on that pair. I'll do it. You know, I'll jump in at 0.5%, 7%, as long as I know that, hey, I'm probably going to get in again below it. You know, if it falls even more, but you know, if you get in here, set your stop loss below the previous low on the C and get up there, you know, you're pretty good risk reward. So, but I hope you get the idea here that how powerful it is and how simple it can be. If it's hard, it's because you're making it hard. Now, I don't mean for you guys that are brand new to the Forex, I don't mean that. I mean, but for you guys that's been trading a while, if it's tough on you, don't make it tough. Just make it as simple as you can and just place your entries at the 786. Sometimes I'll do that, you know, just because, especially if I know that I'm going to be away, like on a vacation or something, I will trade that way the entire week just for the fact that I don't want to watch the computer or my monitors all the time. So Hope you guys learned something. Let's all talk about it in the chat room. That's really what the chat room's for. Is it's not just for me talking. It's for you all to learn and chat amongst each other and to learn this. So I'll see you guys in the room. Take care.